Can you rent out a home purchased with a 30-year fixed-rate mortgage? Have you ever wondered if you can rent out a home bought with a 30-year fixed-rate mortgage? This is a common question for many real estate investors. Let's break down the details to give you a clear picture. First, a 30-year fixed-rate mortgage is a popular loan option. With this type of mortgage, the interest rate stays the same for the entire 30 years. This means your monthly payments are predictable, which is great for budgeting. Many people use this mortgage when buying their primary residence. However, if you plan to rent out the home, there are some important things to consider. Most lenders expect you to live in the home as your primary residence for a certain time, usually at least 1 year. If you purchase the home with the intention of living in it, you typically need to fulfill this requirement before renting it out. If you try to rent it out right away, you might be breaking your loan agreement, which could lead to penalties or even the lender calling the loan due. Different loan programs have different rules. For example, if you have a government-backed loan, such as a Federal Housing Administration loan, there are stricter requirements. These loans usually requiring you to occupy the home. If you have a multi-unit property and live in one unit, you may rent out the others, but short-term rentals are often not allowed. When it comes to conventional loans, the rules can vary. Many conventional loans let you rent out the property after you have lived in it for the required period. Always check your mortgage documents or talk to your lender to understand what is allowed. Local laws and homeowners association rules can also affect your ability to rent. Even if your mortgage allows renting, your local regulations or homeowners association might have restrictions. Some homeowners associations may requiring you to live in the home for a certain time or limit the number of rentals allowed. From a financial standpoint, renting out a home can be a smart move. It can provide rental income and help you build equity. However, being a landlord comes with responsibilities. You need to be familiar with landlord-tenant laws and manage the property effectively. You will also need to report rental income on your taxes and may be able to deduct mortgage interest and other expenses. If you are considering buying a home with a 30-year fixed-rate mortgage to rent it out, here are some practical steps to take. First, confirm with your lender about the occupancy requirements and whether renting is allowed. If you want to rent immediately, you might need a different loan designed for investment properties, which usually have higher interest rates and down payment requirements. If you live in the home first, you can later convert it to a rental, which can be a cost-effective way to enter real estate investing. Make sure to comply with local laws and homeowners association rules. Lastly, prepare yourself for the responsibilities of being a landlord and the tax implications that come with it. Renting out a home purchased with a 30-year fixed-rate mortgage is possible, but it depends on various factors like loan terms, occupancy requirements, and local regulations. Understanding these aspects will help you plan your real estate investments effectively.